give you the markets update now. The local bourse expected to urge lower today in line with global markets. The rand may hold steady at a 4-week high against the dollar after strengthening for a 7th consecutive session. Head of foreign exchange execution at Rand Merchant Bank, Matete Thulare, joining us now to talk us through the latest market developments, including some business stories. The rand, Mr. Thulare, slightly sluggish this morning. What's driving this sentiment? Perhaps a much more pointed question is, are we likely to trade above the 15 rand against the dollar mark this month?
Good morning, Toli. I wish I had a crystal ball, but what I can say is happy spring day. But, I think on the back of that, the rand has had a really turbulent time during the year of 2021. And I suppose when you just look at the year-to-date performance, we are still in the top 3 performers within the emerging market basket, having returned about 1.7%. But, over the past 3 months, we've seen about a 4.8% negative return. Obviously, there has been a lot of factors that have unfortunately weakened the rand and obviously led to this 3-month negative return. We did see the likes of the riots that we saw in July, and obviously the dovish stance by the Reserve Bank locally, and obviously all the tapering on or tapering off from the Federal Reserve Bank out in the US has obviously played into this volatility that we've seen over the past couple of weeks. And I suppose the concern about a possible rerun of the 2013 taper tantrum may have been overblown, given the resilience that has been shown by the emerging market basket, including the rand, despite last week, Friday, where Jerome Powell, the Federal Reserve Chairman, obviously he said that, the central bank in the US could start slowing down the asset purchases. You and I spoke about this already about 2 weeks ago, that, it's around the region of around $120 billion worth of asset purchases that they are doing monthly. So despite all of that, the rand has shrugged off, including the likes of Turkey, Indonesia, India. Just even the local bond market, I think we are seeing some of the biggest gains amongst around 46 to 45 sovereign markets that are tracked in the market. And I think just from a rand perspective, I think even the local bond market has done extremely well, returning around 1.2% just in the month of August. So it just shows you there is a lot of volatility in the market. And I suppose, the rand, unfortunately, that is why it is called the rattlesnake, because you never know when it's going to wake up and start biting you.
Yeah, talking commodities, oil prices making gains in early trade ahead of that OPEC Plus meeting. After the August close with a 4% drop, talk us through what is driving those market moves.
So look, I think the commodity market primarily, it's going to be really, really driven by what happens from a global perspective and what happens in terms of global growth. I think if anything, the mere fact that whether we're having these COVID numbers increase or decrease, and obviously we're seeing the herd immunity coming back into the market with a lot of vaccinations coming on board, that's really going to be driving the commodity market. Because ultimately, if you do have the likes of, the big developed world countries like the likes of the Europe, the USA, the Chinese economies, of those, economies start to open up, obviously they are going to start needing a lot of, the commodity byproducts, including the likes of platinum for cars, the likes of oil. Obviously, there will be a lot of travel that will be happening. So, that is going to really be dependent on what happens in the last 3 months of the year. And I suppose also we're also going to take guidance from what happens from a global perspective with regards to whether the US data is looking nice and solid, and possibly we are seeing them increase interest rates sooner rather than later. That will play a part into the commodity market, or whether, we see these Fed meetings that are coming up, whether they are starting to kick the can down the road and say, well, we're not going to be increasing interest rates. And obviously the big elephant in the room is obviously the COVID numbers and also the variant that we have seen now coming about. Whether we are going to see further lockdowns. If we do further see lockdowns, then potentially it could just mean that, the commodity market could potentially